Thank you, Sydney. I am Jerome, and now I'll be going through our beta calculations. We calculated beta against two different indexes, namely S&P 500 and Nasdaq. We then calculated beta using different time periods of 6 months, 1 year, and 2 years at three different frequencies, daily, weekly, and monthly. As you can see, the beta values can fluctuate significantly across different time periods due to the change in the stock's volatility. The beta values will also differ between the indexes as the stock's volatility will be compared to a different collection of assets in the market. So now, what time period, frequency, and market index should Pony use to calculate beta for Dew Point? Let's ask Pauline. First, analyzing the time period and frequency. A higher frequency of data collection over a longer time period will allow for more data points in order to estimate a more accurate beta. However, if the time period is too long, it is more likely that the company's risk position would have changed, affecting the calculation accuracy of beta. By comparing the beta graphs between the 2 years daily and the 2 years monthly, we can see that by having more data points, we'll be able to fit a more accurate regression line to predict a more accurate beta value. This can be seen from the higher R-squared value for the 2-year daily graph as compared to the 2-month graph. 2 years is also a good enough duration for sufficient data points for an accurate estimation of beta, and it's also unlikely for a significant change in beta in just 2 years. Now, comparing the two different market indices we calculated beta against. Firstly, the S&P 500, which includes 500 of the largest companies in the US, and secondly, Nasdaq, which is an electronic stock market that is especially influenced by the changes in the technology industry. Although both of the indices can be used to calculate Dew Point's beta with respect to each market, we would choose the S&P 500 for comparison. The S&P 500 tends to be broader, hoping to have a bigger representation of companies from various sectors and industry groups. And the Nasdaq Composite includes only stocks that are traded on the Nasdaq market. The S&P 500 tends to more closely follow the entire market. Therefore, Pauline recommends Pony to calculate Dew Point's beta value against the S&P 500 over a time period of 2 years, estimated on the basis of daily returns. However, Pauline does want to highlight the advantages and disadvantages of beta calculation to Pony. Beta allows for quantitative representation of a stock's relative volatility in the near future. However, there are qualitative factors that are not accounted for, and the use of historic values limits the accuracy of beta calculation over the long term, as beta changes heavily over certain periods in time. And therefore, the application of beta calculation diminishes for long-term investors and is not applicable for startup companies. Thank you. Now, I'll be passing the time to Ewin.